Here are the crypto top headlines covered in this video. Ethereum Fractal hints at $3,300 as analyst says it's go time for ETH price. Next, Chainlink's Sergey Nazarov predicts asset tokenization will transform Web3. Also, real-world asset tokenization is the crypto killer app, says Polygon Exec. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ethereum Fractal hints at $3,300 as analyst says it's go time for ETH price. Ethereum's bullish fractal pattern from 2021 consists of a 5-point setup which ETH is currently mirroring in 2024. Ethereum's price action has remained underwhelming recently with a 9% drawdown in September. ETH's Q3 is en route to becoming the third worst period in terms of returns since inception. Yet, favorable technicals are starting to surface for the altcoin as a bullish fractal is reaching a conclusive state. Ethereum mirrors Fractal from 2021 and 2024. From a technical standpoint, a market fractal is a historically repetitive pattern that allows traders to identify trend reversals in the charts. Ethereum is currently painting a bullish fractal setup initially observed in 2021. The chart below illustrates that the pattern consists of a 5-point setup. The pattern witnessed a sharp correction between 1 and 2, and 2 marks the fractal low value. From 2 to 3, the price recovers to the Fibonacci zone of 0.5 to 0.618, i.e. the golden zone. 4 represents a higher low with respect to 2, and 5 represents a lower high with respect to 3. Finally, 6 forms an equal low with 4, where a liquidity sweep occurs and the fractal concludes with a bullish exit. These key fundamental points must be repeated for another fractal to follow the same pathway. In 2024, the same fractal pattern can be identified in Q2, which precisely followed the 5-point setup and bullish exit post 6 in the market. A sharp price correction was followed by a recovery to the golden zone before forming higher lows and lower highs. Now it is taking shape yet again. Ether has yet to complete 6, which would be another low liquidity sweep around $2,150, 4, before a potential bullish exit to $3,375, i.e. a 52% rally. If Ether confirms the last 2 points of setup, the pattern will be completely identical, increasing the probability of a parabolic rally in the next few weeks. It is go time for ETH price, says analyst. Ethereum has struggled to appease ETH holders in Q3, with the altcoin facilitating a 33% drawdown since the beginning of July. However, few analysts believe that Ether is primed for renewed rally after a tumultuous period. Javon Marks, an independent market analyst, indicates that ETH is following a pattern from 2023, which led to a 165% rally in Q1 2024. In an X post, Marks highlights that it is go time for ETH and says 2023 looks to have been the blueprint for another massive upside that can soon be transpiring in this crypto market. Target is at $4,723.50, and a break above can welcome $8,100 into play, projecting another near 2 times in price, if not much, much more. Like the above analyst's high target of $8,100, CoinsKid, an anonymous trader, sees a high price of $8,000 based on a setup that has been forming since 2019. The setup in context follows a broadening ascending wedge for ETH, which is close to completing a 4-point contact pattern, but bouncing from the current level is crucial, says the analyst, Otherwise, the pattern could be invalidated at $1,511. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Chainlink's Sergey Nazarov predicts asset tokenization will transform Web3. Trillions of dollars will flow into Web3 once the details of the Internet of Contracts are worked out. The value of tokenized real-world assets, or RWA, will exceed that of cryptocurrencies on Web3 in the next few years. Chainlink co-founder Sergey Nazarov said in his keynote presentation at Token 2049 in Singapore on September 18th that surge of value flowing from traditional finance, or TradFi, will drastically alter the nature of the blockchain industry. This is the role I think we should all be preparing for. TradFi will be the largest customer of DeFi, or decentralized finance, Nazarov said. Chainlink's cross-chain interoperability protocol, or CCIP, may have a crucial role to play in an emerging Internet of Contracts that will link central bank digital currency, asset chains, consortium chains, and public blockchains, he added. Blockchain can give TradFi what it needs. The Chainlink Oracle network already powers the majority of DeFi, having enabled $15.49 trillion in transaction value since 2022, Nazarov said. For TradFi to use blockchain technology, it needs access to a variety of types of data, including live data, to make TradFi smart contracts function properly. Then it needs cross-chain connectivity. CCIP allows users to carry out delivery versus payment transactions using stablecoins without integrating vast numbers of chains. Value and data can be included in a single transaction through programmable token transfers. You can actually wrap a token in instructions so that when it reaches its destination, it ends up triggering the event it's intended for. Working with legacy technology. A single set of standards is desirable for such transactions, but TradFi has decades of systems to transact across. Nazarov pointed out the Swift network, its enormous user base operates on a single standard, Nazarov said. The next stage of the process is really how do you get the TradFi ecosystem to properly utilize all of this in such a way that allows the value from their systems to fall onto various blockchains and eventually into DeFi. In addition, there is a legal barrier between TradFi and Web3, but it is gradually being reduced, especially in Asia and the Middle East, Nazarov said. When all of the kinks are worked out, trillions of dollars will flow into Web3. Our next top headline, Real-world asset tokenization is the crypto killer app, says Polygon Exec. According to Colin Butler, financial institutions that don't embrace blockchain technology will lose their relevancy and competitive edge. Colin Butler, global head of institutional capital at Polygon Labs, believes that real-world asset tokenization for institutional clients may be the killer application for cryptocurrencies because it dramatically reduces costs and settlement time, becoming increasingly difficult for traditional financial institutions to ignore. This technology is a massive disruptor for the entire global financial system, Butler said, before outlining the capital efficiencies and business opportunities for all financial institutions embracing the shift to tokenized assets. The Polygon executive explained that the cost-cutting benefits enable financial firms to consider new business models that were previously unfeasible due to highly competitive markets and slim margins. Butler gave the example of fund managers who report incredibly tiny margins for their administration business and would benefit from a double-digit reduction in cost. The executive told Cointelegraph, "It is just a much better form of collateral for the global financial system, like all the FX trades, all the options, stocks, and bonds. That's why this could be the category killer for crypto. It's a larger addressable market by orders of magnitude than anything else crypto claims to solve." Butler stressed that financial firms, from small financial institutions to international clearinghouses, will benefit from the dramatic reduction in cost and settlement time introduced by tokenized assets such as bonds, United States Treasury bills, and stablecoins. The growth of the tokenized real-world asset market. The Polygon executive previously told Cointelegraph that real-world assets represent a $30 trillion opportunity for investors as the world's assets come on-chain. According to Cointelegraph research, investment into tokenized U.S. Treasury bills alone is projected to surpass $3 billion by the end of 2024. However, not everyone agrees with Butler's assessment that the tokenized asset market will swell to these levels. Real Vision chief crypto analyst Jamie Coots believes that the 2030 figure for real-world tokenized assets will be closer to $1.3 trillion. The analyst also noted that even at these more conservative figures, the real-world asset market would still significantly impact digital asset markets with fresh injections of capital. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.